Currently, Tesla stock is hovering around a key level and appears to be bouncing off support. However, if it breaks this support level, the situation could deteriorate significantly. Let's analyze the volatility in the options market, which is the primary market for indicating real movement in stocks. The volatility of Tesla stock options is quite high, despite not much movement currently, even considering recent decline. Volatility remains high across all strikes, as evidenced by the volatility smile. The situation looks particularly grim for Tesla stock options. The nearest expiration date's volatility smile is flat, slightly skewed towards puts, and as we move further out, the skew towards puts increases, indicating bearish sentiment. Looking at the open interest in options, there is a massive volume of 250,000 contracts open at the 200 strike, which is something to note. There are also substantial volumes at the 220, 250, and 300 strikes. Regarding call options, similarly, there are significant volumes at the 200, 180, 170, and 150 strikes, each with around 200,000 contracts open. It's worth noting that a significant portion of the volume is concentrated in weekly options, highlighted in yellow, which expired this week. Therefore, market makers have a significant interest in capturing all the premium that has built up during this time. Let's look at the comparison between historical volatility and implied volatility. Currently, implied volatility for Tesla stock is much higher than its historical value. What does this indicate? It suggests that one could potentially devise a very good strategy using options, where all volatility data will be taken into account. We will delve into this a bit later, but for now, I want to show you a 3D visualization of volatility. I rarely show this, but it's crucial for professionals. Few people will understand the essence of it, but it's essential to look at it to devise competent option strategy. It personally helps me understand everything better. Let's return to Tesla stock. Just a reminder that I manage a completely public portfolio focused on trading options of stocks. I trade options of AMC and Tesla. My goal is to outperform Tesla stock. The starting amount is $10,000. I use complex combination option strategies. You can see my entire portfolio. Currently, I have closed a sold call spread combination. I worked with it from the downside, targeting $74. Additionally, I hold one purchased Tesla stock, which you can see in the portfolio. All other combinations are also open. I've also rolled over one option to the next week. I will make additional adjustments to my spreadsheet accordingly. At the moment, the stock is at $180, but let's round it off for our current purposes. As we can see, the strong line represents my strategy. The red line represents Tesla, but the obvious red line is experiencing a significant drop, around 10%, which is clearly due to the downtrend in Tesla stock. However, my portfolio is steadily growing. The primary criterion for a professional is smooth portfolio growth. As we can see, my portfolio is experiencing smooth growth almost everywhere without any significant fluctuation. Now, in terms of time decay, my options are expiring. I continue to sell the next options on this profit and gradually buy Tesla stocks to make my position delta neutral. This is regarding my portfolio, and that's where we stand. Let's return to Tesla stock and see what's happening. I want to reiterate my philosophy. I don't know where Tesla stock will go. I can't predict market movement. Anyone who claims otherwise is simply lying. The question is how money is made. The answer is through proper and prudent position management. That's the main key to success. Now, looking at whether we bounce off this value and go up or break through it, do a retest, and then go down, it's all random. I'm used to relying on sound position management. So let's see what strategy we can currently build from Tesla. I've intentionally sped up the video to keep it engaging. As we can see, anyone who understands options can immediately recognize that this position is practically always profitable. We see that at level 215 we make $2,000, and at level 150 we make $1,700, with losses only occurring with sharp movements up or down. But again, this position needs to be managed carefully. It may seem break even, but if you don't manage it, you can lose a lot of money. I would advise those who understand to consider short-term options in addition to this strategy, meaning selling short-term options. But disclaimer, do not follow me under any circumstances. This is all done for demonstration purposes only. If you don't understand options, I don't recommend building complex positions through options. If you have questions about break-even strategies, email me and I'll definitely help you. Also, if we look at a more detailed chart, we had a surge in the gamma squeeze, specifically in options. I'm talking about the end of 2021 here. When this will happen again, and when the stock's growth will be as significant, it's hard for me to say. It's difficult to time these things accurately. Here, you just need to apply prudent portfolio management. Those are the main pieces of advice from me. I also suggest watching the previous video related to Tesla stock, where I detailed my portfolio and earning strategy. Good luck to everyone.